Good day everyone, welcome back to my channel. Today we are going to do some examples on step index. We are on the 15 minute. If you like my videos, please go like and subscribe. It will mean a lot for this channel. Okay, so today literally just we are doing step index on the 15 minute. The reason why I chose the 15 minute is a good time frame for me to confirm setups and everything like that as well. You can solely trade the 15 minute as well, as long as you understand market structure. So if you haven't seen the videos of where I do examples on the fair value gap, the order blocks, the market structure, please go have a look. In this video is going to be nice and short. I'm just going to show you on how you can find different types of setups in the step index market. Alright, so let's just identify quickly. As you can see here, we were in an uptrend on the 15 minute. So low, high, low, high, low, high, low, high. Let's just mark the most recent low and high out. This is the most recent swing low, swing high. And then as you can see, we broke market structure just here. So we can say it's a market structure shift. What do we have in this leg down? We have a fair value gap. That's going to be a point of interest. We have an order block. That's going to be a point of interest. Let me just do it like this. So as you can see, we left an order block. We left a fair value gap. Price came down. Remember, we only trade in the discounted zones. So we draw our fib from this high to this low. Remember, we won't know when this low is going to end. So you keep on following it. As soon as you see a nice retracement, you can identify that then as your new swing low. And then so you mark it out from that high to this low. So we are only looking for sells in this example. Remember, we had a market structure shift above the 50%. What's above the 50%? This order block and this fair value gap that was left behind. Alright, so price came down, retraced, we tapped in our order block. So if you entered there, you can put your stop loss above this the last swing high. And then where are we going to target this lower second? So our next low was this one down here. And as you can see, price went down, took a little bit long, price went down and our TP got hit. Alright. But I just want to show you guys something as well. Let's say you did not enter on this order block here. You left it, price tapped in, but remember, price never broke this low yet. So this move for me is not confirmed yet. So I personally won't enter on this order block because this low was created good and well, but there's a fair value gap there, so your stop loss is quite big, especially on this pair. So for me, I would leave this trade personally, but if you took it, for example, it would have smashed your TP beautifully. Okay, so we started retracing, order block got tapped. This is the low that was created. Now look what happens here. I'm just going to delete this quickly. So we still have our fair value gap there. Our order block was filled. Now we created a low. What happens here? Our high got taken out here with a wick down. So that means for me, that's indicating it was liquidity that was grabbed. Liquidity. Sorry. Liquidity. All right. So liquidity was taken. Now we had a market structure shift because this low took out that high. So I'm identifying this as a market structure shift. And what do we have? Let's quickly say price went down. Price started retracing as soon as this high was taken out. So I'm going to draw my fib from this high to the lowest point. So we are only going to look for trades above the 50%. Now, what's left above the 50%? We have a little order block there. Let's just zoom in a little bit. As you can see, we have an order block there. We even have a fair value gap right there. So always go for the most extremity of order blocks and fair value gaps. Now, where would our stop be? On the recent swing high. That's where I would put my stop to be safe, because we took liquidity, market structure shift. We have a fair value gap. We have an order block. There we go. As you can see, we have an order block there. Let me just put it nice and neatly for you. There we go. Price came. It tagged us in. Stop loss above this high. And where would we target? The low that was created here. As you can see, that's a beautiful 3-to-1 risk reward trade. Beautiful. Awesome. Now let's carry on. Let's leave that one there. So let's see. All right, we created. So it's a high, low, high, low was created there, as you can see. Let's quickly draw our fib from that high to this low. We want trades above the 50%. What's above the 50%? We have an order block. We have a fair value gap that was there. So let me just delete this previous ones so it's nice and clean. Okay, so we got a high, low, we have a fair value gap, we have an order block that's resting there. So price came up, tagged our fair value gap. If you took that trade, you would enter there, and your stop loss, sorry, wrong one. And your stop loss above this high here. Where would you target? The low that was created. That's going to be there. And that's a beautiful 1 till 7 risk to reward trade. As you can see, you went down immediately. Okay, now let's have a look. Low, high, lowest point before we started retracing. There we go. Let's just delete this. So you waiting for price. You don't know when this low is going to be created. So to confirm this low, I want a market structure shift to happen. That would be here to the upside. So now I'm seeing a good retracement upwards. So then I will identify this as my low. All right. So what's above the 50%? We have a fair value gap there. We have a fair value gap there. and we have an order block there. Let's just delete the previous ones. Okay, so now you're going to ask like, okay, but which order block do I need, or which fair value gap do I need to enter from? I won't enter on this one, it's too close to the 50. Like I said in the beginning of this video, always go for the most extreme fair value gap or order block. So it's going to be the one closest to the swing high or closest to the swing low when you're in an uptrend. So this one I'm going to delete because I won't enter from that one, the fair value gap. These ones are nice because if you look on the higher time frames, alright, there's a fair value gap. Order block. If you go on the higher time frames, this would be a big order block, those two up candles before the down move, and inside that big order block we have our fair value gap. So that confirms for me, alright, this is a valid point to enter from. So I would literally enter from the bottom of the fair value gap. I would put my stop loss above the last swing high, and where will I target? The last swing low that was created. And as you can see, price respects our low to the T before we had a little bit of a retracement. And that's how I approach the step market, literally just by following market structure. Number one, lows, highs, lows, highs. Looking for trades in the discounted area. Preferably, you will wait for liquidity to be taken and then a market structure shift. If you are in a continuation phase, you can just look for that break of structure, enter above the 50% in discount, and you look for your most extreme fair value gap or order block, and you're going to put your stop loss below or above your most recent swing high or low. And that's how I would trade. So I actually noticed this. Quickly have a look here. This trade, when we took this trade, right? This is actually a really good example that would happen. Sorry guys, I didn't see this actually. So we have our big order block, we have our fair value gap. So this is our high, our most recent high, right? Do you agree? Now we entered the trade here. Stop loss was above this high. But look what happened. We actually got stopped out. So that's a losing trade. But look what happens next. Let's see if you can spot it. So we enter the point of interest. Now you can actually see this as a liquidity sweep. Yes, you got stopped out. Where's our most recent swing low? It's going to be, let's have a look. High, low, high. I'm going to take this one. Because remember, a swing low consists out of the candle on the left needs to be higher, candle on the right needs to be higher. So this for me is a fractal low. So this is going to be my market structure shift. Took liquidity in our point of interest, market structure shift. What do we have? We have an order block literally there. You can even mark it like that if you want to. There we go. Just delete the point of interest. And then you can see, all right, tapped us in, stop loss above the most recent high, and then we target the low that was created here. And that's a beautiful 6.7 risk to reward trade. Okay, so yeah, guys, that's literally how you need to backtest. You need to forward test, backtest, and literally This is what I did for hours and hours, literally by going on charts and literally just annotate what is happening. And the more you do this, the easier you will see it in actual market. I will also do a live trade very soon, a few live trades where you can see where I execute in the market as well. All right, hope you enjoyed the video. Please like and subscribe, and then I'll see you in the next one. Cheers.